Hello everyone and welcome to today's video. If you are here, you are probably here because you were sent this link or you found it online or something like that. Whatever it was that led you into looking into how to start trading as a beginner or maybe even an investor. So if you're watching this video, understand that this is going to be straight, simple to the point, nothing pretty. We're going to get basically right into it so that you can decide if whether or not dealing in this aspect of trading is going to be worth it for you. Who am I? Don't worry about that. That's not why you're here. So, not going to get into that. If you're interested about who I am and what I do, look online and all the other stuff that's on there. You'll see everything that you need to know. All right. But, anyways, pretty much this guide here is going to be the beginner's guide to day trading. Understand that first and foremost, day trading and investing are two different things, both along the lines of trading, but two different types of trading. Okay. Now, if you are watching this video because you want to be an investor, that's great. This is still going to provide you with some good knowledge to where to begin as someone who wants to invest. If you want to trade, this is going to be great because it's going to be giving you the beginnings on what to expect when it comes to trading. Reason why I'm making this video is because again, once again, here we are. More people are getting interested in trading and are not knowing where to begin. And this is going to be a good little overview of what you're going to expect, okay? So this isn't to deter anyone from trading, it's just to give you a practical reality of what to expect. Because a lot of times, and even for me as myself as a beginner, when I first got into it, I was, bright-eyed and bushy-tailed, and it was nothing like what I thought it was going to be. And to be honest with you, if someone would have told me that it was going to be the way it was, I probably would have went somewhere else. Maybe not, but you know, um, yeah, it's just good to know the ins and outs of everything before you kind of get started, because that way you can make an informed decision as far as if this is something you want to continue to pursue after you kind of get an idea of what to expect. All right, so I'm going to break this down as quickly and casually as I can for you guys. All right. So this is just basically a beginner's guide to day trading and engaging in practical introduction into the markets. So one of the first things that you need to understand, first and foremost, that trading and investing are two different things. Investing is like a long-term hold. Then there's trading where you can do things like swing trading and day trading and just different types of trading styles. Okay. Now, first thing, everything that we're going to go over is not going to be in no, particular order, but for the most part, as orderly as it can be for you to understand. Okay. So, trading. The first thing when you're first coming into the market, what you want to understand is basically the things that you can trade. When I was first introduced into the market, I thought there was only one thing. I didn't know there was a bunch of other things that was there. And so when people would talk about one thing or another and I read something or something, I'm like, what are they talking about? Little did I know that this was a totally completely different thing that they were talking about trading versus what I'm seeing in other things. Okay. So one of the first things you want to understand is the instruments that there are to trade. There are a few different types of ones. There's, the most common instruments though to trade are like stocks, basically shares in the company. There are ETFs, there's options, there's futures, there's forex, there's crypto, there's even indices. There's a whole, a few different things to trade. I'm not going to get into the differences in between these because, again, I'm just going to touch on these topics here of what to expect in trading. If you guys want to do some more deep detail and knowledge, look at the other videos I have posted, and fundamental analysis, beginning of day trading, starting everything from scratch. You'll see those in the other videos. So right now we're just going to touch on the topic so you can kind of get an understanding of what to expect. Okay. Another thing about understanding trading the instruments is that with different instruments, there's different risk profiles as well too. There's leverage and there's capital requirements that you're going to need to have. Basically, money you're going to have to pay to play. All right, depending on whatever it is you're trading. And then there's going to be choosing what you're trading based on different things such as interest or liquidity, that's the time you have available to trade, and the volatility of trading. So again, won't get into too much detail, but these are the different things that you're going to be understanding when you're picking, hey, what do you want to trade? Do you want to trade Forex? Do you want to trade options? Do you want to trade stocks? So you're going to find out what's good for you. And I encourage everyone that is a beginner to take a look at all of them. Just glance at what they are, see which one interests you the most if you are still interested in trading, and try to gravitate towards that. Because again, I only thought it was one thing, and I'll kind of talk a little bit about my journey as well too. So hopefully that helps you guys out as new traders. Okay, so that's the first thing. When choosing what you want to trade as a beginner, stocks are good for beginners because they're highly liquid. Depending on the market cap size that you're trading, it's pretty much easy to get a good concept on. This trading stocks, which is AKA commons, is what I focus on. My edge and area of expertise is dealing with stocks, mainly small cap stocks for day trading, and then larger cap stocks for investing. So that's what I kind of focus on. I didn't start in stocks. I started in Forex actually, and then started finding out about other things and gravitated towards stocks for different reasons because it fit my personality, which you'll find out as a trader which one you're more interested in. You're not going to be able to trade everything. I mean, you can trade everything, but you're not going to do it well. But you know, you want to stick to what you're, perfecting in. And then there's options. These are high leverage, instruments with low capital needed. So basically high risk, high reward, but it is a steep learning curve. Um, it's a little bit more factors to consider when it comes to trading options, but it is one of the most profitable ways to do so if you can do it correctly. Then there's Forex and cryptos. These are 24/7 markets. Um, you can trade all day, every day with these things, which is pretty awesome. But they're very volatile and much riskier for a few different reasons. Again, not going to go into details of all these, but these are just some of the few different instruments that you can. Not the only These aren't the only things, but these are just some to kind of touch that I wanted to touch on. Okay, and the differences between them. All right. Then, once you kind of decide what you're wanting to trade, another aspect as a beginning trader, when you're deciding what things you want to trade, make sure that it can, when you're selecting it, select your market. For example, if I choose Forex, am I going to be trading in Australian, market versus like, US dollar market or yuan versus, some other type of currency? Or if I'm trading, you know, the stock market, am I going to be trading US stocks? Am I going to be trading Chinese stocks? What am I trading there in that instance? You want to find something that also matches your schedule to the market hours because it's hard to trade at certain times just for you as a person. So some people I know they can only trade on the weekends because they work 9 to 5 or you know things of that nature. They might work a third shift so they can only trade a little bit in the morning. So you want to find out what works best for you and can be optimal for you as a trader, which will also help you match what type of market you want to get into. Okay, for me, on the West Coast, it is brutal getting up at 1 a.m. for me to try to trade pre-market, not gonna lie, and then waiting for the markets for the US kick in at 6:30 a.m. So I'm up throughout all the days, but again, that just kind of fits me, or I kind of actually molded myself to it. I wasn't, you know, familiar with it, but then I started to become familiar with it as I got more interested in actually trading stocks versus forex and other things. So you'll find out what works for you based on your schedule. Okay. Um, You'll understand too when there's higher times of volume during open and close hours. When it's slow, like in the middle of the day, you'll want to understand that aspect as well too. So you're not just going to get into trading and just jump right into it. You're going to be watching a lot of different charts and stuff like that. So understand that as well too. And there's different regions will equal different volatility and opportunities. Okay. And again, as you understand these markets, you'll understand that aspect as well too and what you're wanting to trade. Now, once you kind of get an idea of what is your trading, the best time for it is for you to trade, what you're interested in trading and things like that, now you're going to want to start to kind of get your hands wet in the nitty gritty because you've done the research. You know what to expect, you know what thing you want to trade, what you're interested in. Instead of just jumping into like reading candlesticks and stuff like that, you're actually going to want to get your hands wet, okay? And you'll do that in a second. And when you do that, you're going to determine what brokers or trading platforms you're going to want to use. Now, there's different types of brokers. I'm not going to go into the details with these too much because, again, I do put this all in you know, in the other videos you'll see here on YouTube for free. I go into a deep dive into it in the day trading course and all that good stuff. So we're just going to kind of touch on it lightly. So there's going to be retail brokers and there's direct access brokers. So you'll see what kind of brokers that you like, such as like, there's Webull, um, Moo, Cobra Trading, and I mean, there's so many different ones, Thinkorswim, etc. And then there's direct access brokers as well too, and different platforms too, like DAS and other ones that traders use for direct access brokers, like Interactive Brokers. There's a whole bunch of them, guys. Center Points. I mean, everyone has their own preference. You understand when you're choosing these brokers, when you're trading based on what you're trading too, you're going to look at things such as commissions, the routing options, the brokers, the routing methods that they use if you're trading like Arca or anything like that. Um, Order execution and speed is going to be important too, depending on the type of trader that you are. If you're like a scalper or a day trader, you need to get in and get out. You want to want something that has great execution speed, good hotkeys, things like that. You don't want probably a retail broker who's going to front run your order, So there's things like that to kind of consider. And then there's also going to be like, the popular platforms, like I said, such as Webull, TD Ameritrade, which is Thinkorswim, Charles Schwab. There's TradingView is a very popular platform that, traders use. But yeah, there's different ones that are there. So you look at all those and consider which format fits you the most that you're used to. So there's no, you know, I wouldn't want to say necessarily that there's one better than another. There is to a certain extent, depending on how you are trading, which you won't know right away. So I encourage you to just get familiar with all the platforms and see which ones are more beneficial for you in a type of, trader that you are. Some people use more than one broker. For me, for example, I use, I'll execute trades on Webull, but I'll use like Thinkorswim platform as well too for like news, and then I'll use charting for TradingView. So you can do that. There's no rule says you can't. So understand that as well too. You have to show loyalty to just one thing. So keep that in mind. Then once you kind of understand the platforms that you want to use and get familiar with the user interface of that platform, you're going to start to consider the type of orders that you're going to be placing when you are doing this day trading. So you're going to look at things like market orders. If you're doing market orders, are you going to get the best execution available, the best price? You won't get that with retail brokers. Some of them, will give you a worse price. I mean, it just depends. If that's how you trade and use market orders, then fine. If you use limit orders, you're going to want to know what is the maximum and minimum that they'll be able to accept when doing that, because not all of them will be the same. And then stop orders as well too, which will trigger when the market order hits a certain price level, or may not trigger at all. Direct access brokers will be ones that are better to do that than retail brokers like Webull or Public or anything like that. So that's something to consider as well too. If you're one of those traders who like to set a trade and then set it and forget it, and if it gets triggered, it gets triggered, then you're not going to probably want to use a retail broker. So that's just something to consider as well too, which you'll learn as you're going through utilizing the platforms and executing orders. In the different cases of these orders that you'll learn to use. So not all the time will you be using limit orders for, control and of exits and entries. You might be a scalper and not need that. You might have stop orders to set from, getting caught in the downside. You'll have trailing stops that'll help you lock in profits, different things like that. You basically want to get used to the order types and what cases you're going to be using them, but you'll learn that a little bit more in the next video. You're going to need to expect to understand how to read pricing charts, looking at candlesticks from opens, highs, lows, and close. You can identify things like trends that are, high trends, low trends, downtrends, etc. You're going to look at support and resistance levels. They're going to help you plan entries and exits. That's something you could expect as well too. Chart indicators. So you're going to be looking at different things, and this is going to be a whole section of itself. You're going to hear the basic stuff like volume that confirms price movement. You're going to hear about moving averages, simple moving averages, exponential moving averages, directional trends, dynamic support and resistance, moving average convergence divergence, which is the MACD, relative strength index, which is momentum indicators, things like that. You're going to get into there's a lot of chart indicators. In fact, there's over 300 different chart indicators that I went over with you guys in the advanced trading course as well too. So understand this is going to be a big section. Now, it doesn't mean that you need to understand all these type of indicators, right? You might pick one or two. I think for me personally, like I said, I like to do 5 or 7 at the most. And I'm not even looking at all of them at the same time. So you're going to understand that you're going to learn these kind of things as well too, which is going to be quite a bit to learn. Okay. So That's another thing to kind of expect. Another thing you're going to want to get to ready to learn is market structure and price action, understanding the bid, spread, ask price levels and where the orders are stacking. Like when you're looking at a chart or looking at the price of a stock at a certain time, why is it like that? Because you're going to be looking at the spreads and you're going to understand what that stuff is. You're going to recognize breakouts, consolidations, pullbacks, pattern recognition. You're also going to understand how to use wicks and bodies when reading charts and volumes in context and how that all plays out. So a lot to learn there. Okay. Then the next thing you're going to probably want to be understanding is how to, choose a time frame when you are trading. That's going to kind of go along the lines of you learning who you are as a trader, not deciding like when's the best time for you to trade, not only in the market, but hey, you as a trader, what is your level of consistency? Are you good at 1 to 3 minute charts? Are you good at 5 to 15 minute charts? Are you good at swing trading? You much rather, set it for an hour and hold it overnight or longer. That's going to be catered towards the type of style and trading that you're, drawn to and what might work for you. Okay. You're going to understand different multi-time frame analysis using higher time frames and context for lower entries. 1 hour trends, 5 minute executions. It's going to help you align with the direction of market and avoid like fake signals and getting faked out a lot. You'll learn that a lot as well too. And then different trading styles. Again, like I said, you're going to learn if you're a fast scalping trader with small profits and high frequency, or if you're an intraday trader where you're just, open to close in the same day, which is the type of trader that I am. There are some traders who are swing trade holders who hold positions over days or weeks. I do that sometimes as well too. And then again, there's, longer term traders. So you'll understand your trading style, what fits you the best and what time frames fit you the best as well too. You're going to learn that probably the hard way, but you'll learn it regardless. Okay. Again, you're going to pick your style depending on your time availability, risk tolerance, and speed preference. Again, things like scalping needs precision. Swing trading requires patience. How patient are you? Um, and you'll understand why or why not you can do that. You'll find a lot about yourself when you become a trader. Just understand that. You're going to test each style with paper trading or just small size positions. You'll get into that, and I teach you guys that as well too in the day trading course. But again, that's what you're going to learn as well too. You're going to learn how to develop a trading strategy. Now, here's a big thing when you've probably been online looking at YouTube videos and things like that. You're going to see all these little ads about, oh, this strategy, that strategy, this strategy. Understand, guys, there is no foolproof strategy. Okay, I want you to understand that first and foremost. In fact, some of the strategies that do work, yes, they do work, but for many people, they won't work because that doesn't fit them. You're gonna have to match your strategy and how you trade with how you are as a person. And I didn't learn that part until so many years down the line. I spent day in and day out watching constant YouTube videos of traders doing, different strategies and this strategy. I'm like, why isn't this stuff working for me? Well, one, I wasn't really that good at reading the charts, but also two, it just didn't fit me as a trader. So hopefully that saves you a little bit of time from trying to force yourself to learn a strategy that isn't going to work for you because you're not that type of trader. Okay, that is going to be very important. But when you're developing a strategy, you're going to want to define your entries and exits, criteria, breakout. You're going to choose indicators and patterns that's going to fit your style. You're going to set risk to reward ratio and trade management. You're going to learn that, and that's going to be a hard part for a lot of traders as well too. Again, in the day trading course for beginners, guys, I teach you all this, where to start, how to do it, because I want you to learn how to build your own trading strategy. You shouldn't have to follow any traders. You can use it for inspiration, right? But again, it's going to be different for each person. There is no cookie cutter solution when it comes to a day trading strategy. So you need to learn how to develop your own strategy. And I wish I would have learned that instead of spending 4 or 5 years in the beginning of trading trying to mimic some other traders' trading strategy, which is something you shouldn't be doing. Okay. But everyone's going to swear because they're going to get clicks and views of you looking at their YouTube video and, you know, trying to mimic their style. And you're going to lose a lot of money while they're sitting there raking it in. All right. So learn to develop your own strategy. When you're doing that, you're going to be doing things like back testing, forward testing, um, testing your strategy against historical data. Now, I say do that to a limited extent, and I'm not going to go over it too detail why, but you only need to back test, but so much for a few different reasons. Now, forward testing is more like kind of like real time testing, basically, paper trading, and you need to take that with a grain of salt as well too, without money, because there are platforms, all of them, most of them can let you trade basically with fake money. Like you're not really trading with real money. I go into the details of why that is important because a lot of you traders who do develop a strategy, you'll see that it's working on paper and you'll wonder why it's not working in real life. And I go into detail why that is the case as well too in the beginner course. So yeah, keep that in mind. Refining, your trading based on win rates, drawdowns, and risk management and things like that, which is going to be important to you journaling. So if you don't like to journal, understand you're not going to be a trader. Okay, it does take consistency with that for sure, and I downplayed that a lot, and especially at least the first 5 years of me trading. So yeah, when I started doing that, it made a big difference. But understand that's something that you are going to be doing. Now, strategy optimization, that's going to be documenting your results, again, journaling, tweaking different variables one at a time. You're not going to be doing it, all at once. It's not how you're going to progress. You're going to look at consistent edges, not perfection, okay? I mean, when you're doing that, guys, like everyone thinks that, oh, my strategy needs to work 100% of the time. No, it does not. You could be wrong 70% of the time. As long as that 30% of the time that you're profitable, you're scaling in and scaling out, and you're basically you're right more than a lot harder than you are wrong, more often than you are wrong, then you're going to be okay. Okay. So just keep that in mind. Avoid, overfitting to past data because, you know, it's limited. What was in the past is in the past, and understand history repeats itself only but so much. Okay. So, and in trading, all it takes is, one little thing and you can be wrong, especially if you don't have the discipline. But that's kind of how you're going to be doing your strategy optimization. Risk management is going to be very, very important too. I like to tell, all people that are, trading as well too. I don't like to call you guys like students or anything like that because I'm not your teacher. I'm not your mentor or anything like that. I'm a trader. I don't have time to be making YouTube videos. I'm not here to babysit, but I'm going to try to give you guys pointers and draw off of experience and help you out as much as I can. Okay. So, but understand that I am in the market too every day, if not every other day. So understand that, yeah, things will be like that throughout your trading, career if you decide to do it. But risk management is what's going to keep you in the game. So understand that that is very important because without risk management, you can blow up your accounts, and I'll be honest with you, you're going to blow up your account, and you're going to do it more than once. Me personally, I've done it quite a bit of times before I started to be consistent. And when I say quite a bit of times, I mean quite a bit of times over a long period of time. All right. So don't think that you're going to get into trading and become some miracle trader because 99.9% of the time you're not going to. Okay. But you're going to be using risk management skills to, manage a small percentage of your capital. You're going to be able to set, stop losses. You can't, you shouldn't trade without one. You can trade without one, but you shouldn't. Um, but you want to, try to protect from things like large drawdowns and, losses of your accounts, and that's going to have all your discipline come into play, which we'll get into when we, talk about the risk management in the course. Okay, so pretty simple there. And then they're gonna talk to you. You're gonna learn about like, leverage and margin and the limits of it, and understanding what margin is and the requirements and the buying power. Avoid over leveraging yourself. I can't stress this enough. I've seen too many people blow up their accounts from over leveraging. Me personally, I don't like to leverage anything. I don't have to, but I do like to understand the process and keep that in mind when I am trading and calculating my risk to reward. But again, to each his own. So you want to avoid doing that as much as possible because it increases a big chance of loss. And then daily, weekly limits will help protect your account as well too. Guys, I cannot stress this enough as well too. And I wish I would have learned this probably anywhere between the first and second time I blew up my account over the years when I first did it because and that's why things like the PDT rules in effect, which again we're not going to go into detail with, but we'll talk about. But that's why that normally is in effect to help protect people themselves from things they can't control as a human. So it's not your fault of your own, but also too, you gotta discipline is gonna come into play when it comes to knowing your limits, and this is very, very important. Okay, and I can't stress it enough too. That's gonna keep you in the game just as much as risk management is setting yourself with a limit, and then having that risk management mindset. Think in terms of probability, not certainty, guys. I will never tell you that what strategy I come up with or what trade I'm about to take is going to be 100% proof. Usually, it's the odds of it happening is more than likely my favorite. Again, in the course that I go over with you guys, we talk about things of probabilities and it not happening, random reinforcement, things like that. Because again, preserving your capital is more important than profit. Trust me. You live to trade another day. All right. Staying disciplined when losing, and then don't trade on the tilt, basically. So again, we're going to cover that and more, but that's what you're going to have to be prepared to learn as a new day trader. We're almost done. We got a few more slides left. Another thing you're going to have to learn as a trader is the process and routines that you're going to go through, because you're going to have a pre-market routine, scanning news, reviewing things like top movers. During your trading hours, you're going to follow your plan, stay focused, perfect your craft, work on your edge. And at the end of the day, review your trades and journal your performance. This is a really important thing, guys, doing this whole routine. Okay. I mean, part of this I try to eliminate for a lot of you guys. We have the alerts, right? That gives you the stocks that are in play. You don't have to be running around scanning, trying to find things. That's what the alerts are for you to focus on those particular stocks and attack it with your plan in place. Okay, but you want to stay your strategy, stay focused, and again, journal your performance because that is going to be really important. A lot of times, traders will come to me, "Hey, Eric, I have an issue. Hey, what about this? What about that?" I'm like, "Well, what is your? Let's look at your journal real quick. Let's take a look at this." And they're like, "I don't have a journal. I didn't keep my." Well, how the heck are you gonna improve if you don't know what you did wrong? And I promise you guys, despite what you might see online, journaling is more than just entering and when you know, took a trade at what pricing point, and then when you got out of the trade. Journaling is way, way more than that. Okay. And I go into the details of what you should be journaling in the course as well too, because it is a lot more than you think, but you need to be doing it. It's required. Okay. Um, so keep that in mind. That's something you're going to be doing. So you need to set time for that. Creating a trading plan. If you don't like planning or writing down rules and strategies and risk and limits, if you don't like doing any of that stuff, this isn't for you because it is going to be a requirement. I only have, I have probably about 4 or 5 trading plans that I have, depending on how the market's going, and I've developed that over the years for myself. But that's going to be what you're going to be doing as well too. All right. Plan for different scenarios: gapping up, gapping down, choppy markets. Stick to the plan. Don't try to improvise emotionally. Be okay with taking a loss. I can't stress that enough, all right? And you're going to lose a lot more than you're going to win, especially in the beginning. In fact, you're probably going to lose everything all the time. All right? So those that have the determination and grit stick it out, and those are the ones that make it, to be honest with you, which is why less than 1% of people, do this. Another thing you're going to get into, and this is going to be super duper important, is trading psychology. You're going to have to master discipline, following your rules, not your feelings. Manage your fear, manage your greed, because all those will take you out of your trading plan. And again, accept losses because it is the part of the game. The best traders are the best losers. I promise you that. And I really can't stress enough. This is something that no guru on the internet is going to teach you. They'll tell you about it, but they won't teach you how to do it and what things you can do to make this better for you as far as trading psychology. I actually go through things that you need to do and what you can do throughout your trading, career in general, um, to help manage that psychology and become better. And I haven't seen any of it actually on the internet, but it's just things that I've developed over the course of trading that has helped me a lot more than what I expected that I put in the course for you guys, which a lot of people who've taken it told me that it worked well for them and they didn't see anything like that online. I'm surprised that they don't, but it's because, again, a lot of these things you see on YouTube are just strategies and trading personnel personas, which is why I'm making this video because I want you to understand that this is a real thing that really people really do, but you got to do it the right way. Unfortunately, this is, unlike almost any job, it can be faked by fake people. So understand this is going to be a part of what you're going to learn as a day trader. If you can't handle this, if you can't handle being wrong, especially more than you are right, this isn't for you. I've met people who aspire to be traders, and I tell you, not even, they try to stick it out in the market a year or two, and they're done because they just can't handle being wrong. Me, I'd be like, honestly, because my risk management is so good, a lot of times I'm glad I'm wrong because that means that I'm going to be learning something new, and then it humbles you. The market will humble you. Okay, so, but again, those many times that I'll be wrong, when I am right, I'm right, and I'm really right. So again, you'll find I develop the consistency of that pretty good. So trading psychology, guys, very important. Emotional control. This is probably the biggest thing that, I know I keep saying that this is a big thing, this is a big thing, but guys, all this stuff is really important. But emotional control will wipe away your gains more than you know, any bad trading strategy can. Okay, revenge trading is a real thing, especially after a loss. This is where you're going to have discipline and control. For me, it took a really long time to practice the way I do it, and I teach you guys how I do my emotional control and what I have to stick to as well too. And it saved me countless of dollars and countless of bad trades and making my situation worse. Okay, so that's over in the course as well too. Taking breaks when you're emotional and you're overtrading, you got to be able to determine where you are in that aspect, okay? And just practice mindfulness and have emotional awareness. And again, I teach you guys what I do on this, and it works very well. I know everyone can't do what I do, but I just want to give you an idea and concept of what you can do to do that. So we dig into that a lot in the psychological aspect of day trading for beginners, and we go over it some more too in the advanced course as well too. Mental toughness is very important. You're going to need to be practicing that, confidence and preparation. Consistency, again, you don't need to be right 100% of the time. Just, hey, have the courage to take the trade. And if it's wrong, it's wrong. If it's right, it's right. Great. Keep it moving. That's it. Don't get emotionally attached. Stay confident. Be prepared. Trust your strategy. Trust it. All right. Or at least trust the learning process into it. Stay focused on process, not just the profit. Too many traders get into trading, they see people making thousands and sometimes even millions of dollars in just minutes, right? And they're like, "Oh, I want to make that much money." If you're into trading just to make money, I'm going to save you guys a lot of time right now. If you're into learning how to day trade just to make money or escape your 9 to 5 or blah blah blah, if you don't have an actual love for the process, this is not for you. Okay? I don't mean to be mean, but I do mean to be mean. Even if you like, oh, my biggest reason of trading is why? Because I want to have time for my family and I want to do this and I want to do that. I want to have freedom from my 9 to 5. I want to be able to live the life I want to live. That is not enough. I'm going to tell you that is not enough. Okay. You got to enjoy trading, period. All right. If that's the case, if you just love money, you want to be free 9 to 5, go start a business. All right. Go into real estate, work on some type of passive income. That's going to be your key to success there. This isn't Trading is not for people who are just here to profit. All right. So I'll step off the high horse on that one. So also building a long-term mindset, that's going to build resistance. I can tell you if I can tell people one thing about trading, if I wish I would have known one thing about trading is that it is not as quick as you think it is going to be. All right. For reference, again, I'll use myself. I've been trading for a very long time. Okay. It took me over 8 years, and this is with from start to finish. It took over 8 years just to even get to the point where I broke even. Okay. And this was with me consistently trading day in and day out. I took like a break for like a couple of months just to kind of recoup, especially it was after a time I blew like 25 grand on my account and whatnot. So I took a few months off. I thought I was done with trading. I came back to it. I just gravitated back to it. But within that few months though, I had a little break. So um, 8 years just to get to the point where I was breaking even. Because around year 6 or so, I started to become more consistent, and was refining my strategy, was taking it much more serious, and things just started to click a little bit more after that break. So this is a long-term game. This is not a this is not a get rich quick scheme. Even though you're making money quickly, you're not gonna get you're not gonna get it that quickly. So for example, I like to use the Usain Bolt example all the time. Like, yes, the guy can run, 100 meters in like, 10 seconds, right? But how many years did it take for him to be able to come that fast? Same exact thing with trading. It's going to take you years and years and years and years and years to be able to develop the skill to be able to do it that quickly. Okay? So, mental toughness is very important. Then you're going to understand things like economic news and events. You're going to look at key events. You're going to learn about CPIs, fair share meetings, job reports, earnings, different things like that, how news affects volatility, be prepared for big swing trades and economic calendars to plan around major releases, things like that. This, again, is why the alerts are here for our group, and whoever's subscribed to our group, we use alerts to kind of handle all this stuff for us. But you'll develop a pattern or a way to do it however you want to do it. And I walk you guys through in the course too how to do that on your own without even using alerts. If you don't want to subscribe to alerts, you don't have to. It's just there to make you guys, life a little bit easier, especially if you're trading the type of trades that we trade. Okay, so there's that. Next is just trading around the news. You want to avoid, being in there before major news is happening. Smaller sizes, wider stops, different things like that. You'll learn about that stuff and initial reactions before and entering as well too. Again, journaling and reviewing your trades, you're going to learn about doing that. I teach you guys that in details in the course as well too, but you're going to learn about tracking your trades, entries, exits, emotions, outcomes. You're going to learn about identifying patterns of wins and losses. You're going to learn how to help reinforce good habits and improve your decision making. One thing to understand too with this position you are in when it comes to trading, you will always be learning. You're going to always be studying charts. You're going to always be watching recaps. You're going to always analyze your mistakes. You're going to review your trades weekly, monthly. The learning just doesn't stop, guys, because the markets are always changing. Always. It will never stop changing. From now until the day we die, when I'm long and gone, it will keep changing, okay? So understand that this is a career where you're not going to know everything all the time because it's going to always change, all right? And then another thing here too, advanced techniques and tools. You're going to learn things about like order flow, DOMs, tape reading, footprint charts, non-time bias charts, ticks, range, volume, algorithmic trades, data-driven traders, and you're going to also learn about AI implementation. Now, this stuff here I don't teach in the beginning course. I do this in the advanced trading course. You guys will be seeing us, doing that as well too. And yeah, that's some of the advanced things that you'll be learning. All right. And then another thing here, lastly, when you're going to explore these advanced tools, you're going to learn about that. You're going to do that after mastering the basics. And I promise you guys too, like just looking at my little free courses, even taking my beginner course, you're still going to be in that realm of taking the basics, but you're cutting down many years of learning and frustration of things and knowing what to expect. Um, you're going to know about tools that are offered, edges that are required to get a deeper understanding of making your trades, and you're not going to want to do something like rush this stuff, guys. Being complex is not going to be profitable. Just because you know a lot of things or doing a lot of things does not mean you're going to be profitable. I promise you that. I made that mistake in, you know, towards getting more comfortable with trading. I thought, hey, the more complex I make my trade, the better my outcome is going to be. That is not the case. And in fact, now my trades are so simple. When I tell people, you know, that are like messaging me or kind of going over things with me, they're like, that's it. That's all you do. I'm like, yeah, that's it. There's nothing else to it. But again, that's what fits me as a trader. So you'll understand that as well too. Complexity does not equal profitability. Okay. But that is pretty much all of it, guys. So hopefully this helps you understand just the beginning part of trading. If you